What's going on, everyone? Today, we're diving into one of the biggest questions in the crypto market right now. Why is XRP and Bitcoin falling? If you've been watching your portfolio lately, you've probably noticed that XRP is under pressure, Bitcoin has been losing momentum, and many crypto investors are starting to wonder whether this is just a healthy pullback or the beginning of something bigger. The important thing to understand is that XRP is not crashing because of one isolated event. Instead, we're seeing a combination of three major catalysts hitting the crypto market at the same time. When multiple negative catalysts arrive together, markets tend to react much more aggressively than they would to any single event alone. So in today's video, we're going to break down the three biggest reasons behind the recent weakness in XRP and Bitcoin, explain what they mean for investors, and discuss what could happen next. Let's get started. Reason number one, crypto regulation delays continue to create uncertainty. The first major catalyst is regulatory uncertainty. For months, investors have been anticipating clearer cryptocurrency legislation that could provide a framework for digital assets and potentially encourage greater institutional participation. Many market participants expected meaningful progress much sooner. Instead, legislative timelines continue to move further into the future. Every time investors think clarity is approaching, new delays emerge. And while delays may not sound dramatic on the surface, markets hate uncertainty. Investors can handle positive news. Investors can handle negative news. What they struggle with is not knowing what comes next. That uncertainty creates hesitation among institutional investors, hedge funds, and large financial firms that may otherwise increase their exposure to digital assets. For XRP specifically, regulation has always been a major part of the investment story. Whenever regulatory progress appears likely, XRP tends to benefit. When progress stalls, investor enthusiasm often cools. The longer these timelines extend, the more patient investors are forced to become. And patience is not always something financial markets excel at. This doesn't necessarily mean regulation won't arrive eventually. It simply means the timeline may be longer than many investors originally expected. And in the short term, that uncertainty creates pressure. Reason number two. Bitcoin's largest support system may be weakening. The second catalyst could be even more important. Bitcoin has benefited tremendously from institutional demand over the last several years. Large companies, investment funds, and institutional buyers have played a significant role in supporting prices. One of the strongest bullish arguments for Bitcoin has always been simple. Large buyers continue accumulating. But what happens when that buying slows? Or worse, what happens when some of those large holders begin selling? That question is suddenly becoming very important. Markets operate on supply and demand. When supply exceeds demand, prices rise. When supply exceeds demand, prices fall. It's that simple. If major holders who were once consistent buyers become less aggressive or even reduce positions, the market can feel that impact. Now, it's important not to overreact. A single sale does not automatically signal disaster. Large investors sell for many reasons, including portfolio management, capital allocation, risk management, and liquidity needs. However, perception matters, and when investors begin questioning whether major buyers will continue supporting the market, sentiment can shift quickly. Bitcoin remains the largest cryptocurrency in the world. When Bitcoin weakens, it often drags the broader crypto market lower. That includes XRP, that includes Ethereum, that includes nearly every major digital asset. So even if nothing changes fundamentally for XRP itself, weakness in Bitcoin can still create significant downside pressure. This is why many traders are watching Bitcoin support levels very closely right now. Because if Bitcoin struggles, the rest of the crypto market may struggle as well. Reason number three, global economic risks are rising. The third catalyst is something many crypto investors underestimate: macroeconomics. Global markets don't operate in isolation. Cryptocurrency prices are influenced by interest rates, inflation, geopolitical developments, energy prices, and overall investor confidence. Recently, several macroeconomic concerns have started resurfacing. Energy markets remain sensitive. Geopolitical tensions continue creating uncertainty. Investors are questioning economic growth forecasts, and markets are beginning to price in potential risks that could impact global financial conditions. Why does this matter for crypto? Because cryptocurrency is still considered a risk asset by many institutional investors. When investors become nervous about the economy, they often reduce exposure to riskier investments. That includes technology stocks, that includes growth companies, and yes, that includes cryptocurrencies. We've seen this pattern repeatedly over the last several years. When risk appetite rises, crypto often performs exceptionally well. When risk appetite declines, crypto frequently experiences significant volatility. The challenge right now is that several macro concerns are appearing simultaneously, and that combination creates uncertainty. Investors don't like uncertainty, markets don't like uncertainty, and crypto tends to react more aggressively than most asset classes. Technical analysis: why XRP's current levels matter. Now, let's talk about the charts. Whether you're a long-term investor or a short-term trader, technical levels matter because they influence investor psychology. Certain support levels become important because many market participants are watching them. When support holds, confidence improves. When support breaks, fear increases. Right now, XRP is approaching a critical area that many traders have been monitoring for weeks. The reason this level matters isn't because of magic, it's because thousands of traders are making decisions based on it. If buyers step in aggressively, we could see stabilization and potentially a rebound. If sellers remain in control, downside volatility could continue. This is where emotions become dangerous. Many investors panic near bottoms. Many investors become overly confident near tops. Successful investing often requires doing the opposite. That doesn't mean buying blindly. It means staying disciplined. It means focusing on probabilities rather than emotions. And it means understanding that volatility is normal in crypto markets. What could happen next? There are essentially three possible scenarios. Scenario 1. Bullish recovery. Regulatory progress improves, Bitcoin stabilizes, macro concerns ease. If those factors align, crypto markets could recover surprisingly quickly. Historically, crypto has demonstrated an ability to rebound much faster than many investors expect. Scenario 2. Sideways consolidation. This may be the most realistic short-term outcome. Markets digest recent volatility. Investors wait for additional information. Prices fluctuate within a range while uncertainty gradually declines. This would allow technical indicators to reset while investors reassess risk. Scenario 3. Further downside. If regulatory delays continue, institutional demand weakens, and macroeconomic conditions deteriorate, additional downside remains possible. No investor wants to hear that, but acknowledging risk is part of responsible investing. Markets rarely move in straight lines, and crypto markets certainly don't. The big picture. Despite all the fear, it's important to maintain perspective. XRP remains one of the most widely recognized digital assets in the industry. Bitcoin remains the dominant cryptocurrency. The long-term investment thesis for many crypto believers hasn't necessarily changed. What has changed is investor sentiment, and sentiment can swing dramatically in both directions. Today's fear can become tomorrow's optimism. Today's optimism can become tomorrow's fear. That's how markets work. The key is separating short-term noise from long-term fundamentals. The investors who succeed over time are often the ones who remain disciplined during periods of uncertainty. Final thoughts. So, why are XRP and Bitcoin falling right now? The answer comes down to three major factors. Number 1, ongoing regulatory uncertainty. Number 2, concerns about institutional buying and selling activity. And number 3, rising macroeconomic and geopolitical risks. Together, these catalysts are creating a challenging environment for crypto markets. That doesn't guarantee a crash, it doesn't guarantee a recovery, but it does explain why volatility has increased significantly. As always, investors should focus on risk management, stay informed, and avoid making emotional decisions based solely on short-term price action. The next few weeks could be extremely important for XRP, Bitcoin, and the broader crypto market. The question now is simple. Do you believe this is a temporary correction or the beginning of a larger move? Let us know your thoughts in the comments below. If you enjoyed this analysis, don't forget to like the video, subscribe for more market updates, and stay tuned for future coverage of XRP, Bitcoin, and the biggest developments impacting the crypto market.